Barangia is a venture capital firm. We have about $600 million under management across our UK and US offices. We don't really have a headquarters. We're somewhat equally distributed amongst the two geographies. We have some of the top performing funds in the UK, and we're very proud of our track record. We're generalist investors. We tend to invest about £1 to £5 million into early stage businesses, sort of A to D rounds. We look for businesses with proven commercial traction, and that generally means about £1 million plus in turnover for us. If we do a deal with our US colleagues, we would go up to about 15 million, and we'll participate in syndicates up to about 20. My own background, I'm from the US. I started my career in consulting. I had the pleasure of being in New York and San Francisco during the original dot boom and dot bust, and it was an absolutely wild time, both on the up and the down. I was in my mid-20s, and I had the pleasure of working with, if anybody remembers them, Boo.com and eToys, which were some of the most successful fundraisings and some of the most glorious failures that we've ever seen. It was truly an amazing time. Lots of my friends were getting rich off of this magical stuff called equity. I decided I wanted some, and when I was offered the opportunity to be part of the buy-in team for Swiss Army, I was delighted to take a big pay cut in exchange for equity, and I thought I was rich. We did a great job turning around some of that business. I grew the watch division quite significantly, absolutely loved it. And then September 11th hit, and our largest distribution channel for the knives division, which was our largest profit generator, was airports. And knives were then banned in airports. And within probably 48 hours, we broke all of our banking covenants. And that business turns into an almost distressed sale to one of our largest competitors. And that was my first education in equity. I was young and stupid, and now I'm only one of those. But I went on to go back to consulting for about 5 minutes, and then I went on to INSEAD and funded my way through INSEAD, in part working on 3 different startups. One of them was quite successful, and I handed it back to the parent company in the US. One of them was quite a significant failure, and the last one is still running and was recently sold. Following that, I went back into consulting and then to Beringea, where I've been for the last 8 years. It's the funnest job I've ever had, and it is such a privilege to be able to work with people like you guys. Even the businesses we don't invest in, we're just constantly floored by the intelligence, the passion, the drive, the hard work that people have, and the commitment that they have to their own businesses and their own ideas. In terms of Barangia, I talk about myself not just because it's one of my favorite subjects, but also because I think it's somewhat representative of the way that we think about investing in small businesses. The only thing that we really know when we invest in a business is, one, that we trust the management team, but also that most things are not going to go the way we plan for them to. Some things will go better. If we're lucky, a few things will go according to plan, but we need to be ready and prepared for those things. And for us, it's very important that we are part of the family. If the time that we learn about the business is at monthly board meetings, then we're not doing our jobs well. We don't run businesses, we don't insert management teams. We need to trust you to run the day-to-day, but it's very important to us that when things are going well, we can react pretty much immediately to provide more resources, more cash, more tools, more experience in terms of how to scale the business. When things are going poorly, we need to know that you're also comfortable to pick up the phone and ask for our help, and we can again provide experience and guidance and assistance in terms of how to trade through that, because we've probably been through that sometime before. In terms of kind of advice to you guys, I think this room is full of great investors, and a lot of us know each other and work with each other, and it would be a privilege to take money, I think, from anybody in the room. The reality is, what matters most is who you get on with on a day-to-day basis. And if you find a number of investors that you like, there's no reason you can't take money from all of them and get a little bit of insight from everybody. So I think you do need to spend time, and as Asmat was saying, it really matters that you kind of, you click with them and that you feel like you can work with them. Get up on a day-to-day basis, talk to them, work with them, and trust them as well. And then the last bit of advice, on pitches, if you have a product, lead with the product. Let us see what the product is first, because telling us about the market and about the other things surrounding your product are always going to be less convincing than just seeing what it is. Thank you.